Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Take two. Yes, it is still the 5th day of April, 2021. And we had some technical difficulties on this end, and I guess we're about to find out if we got it fixed or not. But we are streaming live, and we already had our opening prayer. I already gave you the numbers from around the world. I'll give you those again real quick. Currently, the Dow is up 380 points. NASDAQ up 227. S&P 500 up 58. And the Russell 2000 up 6.5. That's a gain on the Dow of over 1%. For the NASDAQ, over 1.5%. For the S&P 500, almost 1.5%. And the Russell also ran. And in the commodity basket, crude oil, wow, what incredible volatility we've seen out of crude oil. Crude oil is down $2.92 on the session, trading 58.53 last. Now that's a drop of almost 5%. Gold down 70 cents, trading 17.2770 last. Silver down 20 cents, trading 24.74 last. The Asian markets at the close, Nikkei posted a gain of 235 points. Shanghai rose 18. The Hang Seng gained 560, which is a gain of almost 2%. And in the European markets at the close, FTSE up 23, DAX up 98, CAC up 35. And that gives us a green day in Asia, green day in the UK, and it's a green Radio Monday here in the US of A. Now, in part one of today's broadcast, Michael did a recap of everything that happened this morning in the live training room. So you'll see a part one in YouTube, and you'll see a part two to see the recap, opening prayer, all of that, part one. And then we'll cover real quickly the concierge and logic alerts. There were not a lot of logic alerts. And as we get into the charts, I think you'll understand why. Now let me open up my Telegram app because I'm having to restart everything. And let's jump down to the recap. We are currently in week 140 of Logic 247. Logic 2, we have two types of alerts. We have the logic alerts, which are based on logic, current price action, and are issued around the clock 24/7, Sunday night at 6 p.m. Eastern until Friday afternoon at 5 p.m. Eastern. We have traders around the world, so our day session is their night session and vice versa. The other alerts are called the concierge trade alerts. That was our original alert service. Those do not come out around the clock. Those are not based on current price action. The logic or the concierge alerts are based on historic price action, and those are published shortly after the Globex Open each evening. Now, this is what's happened so far this week in logic, current price action, round the clock, total of 8 alerts, Very quiet Sunday night and Monday morning. One never triggered, 7 actionable alerts. So far, nothing stopped out. But the week is early. Now, the actual alerts themselves look a little like this, because this is they. Okay. So we are up to alert number 7,054 over all the weeks. Our sample size is now at 7,054. On an average week, 20% of the alerts will get stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a simple 3-step method that we teach all of our traders. In the live training room, when Michael is teaching you the actual strategy, we use a fast chart, a 4-tick range chart, so that he's able to see you lots of trade opportunities, lots of setups, over and over and over during the 2-hour session. As you move to larger time frames, if you so choose, and all of the alerts are based, both concierge and logic are based on the 30-minute chart, we don't use a fixed number there. In the live training room, it's an 8-tick hard stop on everything. Michael is teaching you the principle that you must always have a hard stop in place, because if you don't, it's not really a trade, you're just gambling. Okay? But he's teaching you that you must have a hard stop. So we just, to keep it simple, because there's, if you're trying to learn the strategy, 8 ticks every trade, every market. Now, using market structure, here's an example on the Russell. Okay, it was to be long, 2293, B is buy, T is initial target. Most trades will have multiple targets. Now, PR stands for potential resistance. So if you're going long the market, you've got an initial target, and then you've got a second target, and a third and a fourth, and then the final trade 2 target. If it is a long alert, the final trade 2 target will be the weekly trading zone above. If it's a short alert, if you're selling the market, then the final trade 2 target will be the weekly trading zone below, which in this case would have been 2331/32. On Sunday nights, we're using the previous weekly trading zones, and those zones still hold sway over the market into Monday, Tuesday. As the week progresses, the new alerts kick in, and they hold greater sway over the market than the previous week. The zones are issued every Monday morning, 6:15 a.m. Eastern for all of our members. We've been publishing the zones since December 14th, 2009. Now, price flows on a 1-minute chart the same way it flows on a monthly chart. From support to resistance, back to support, back to resistance, over and over, again and again. The never-ending cycle. Now, the weekly trading zones. Those are your fixed support and resistance for the week. Once they're published on Monday morning, they're not changed the entire week. We don't massage them, manipulate them, nothing. They are carved in stone. This was a long on crude oil. Dana, this was a long buy, initial target, potential resistance, second target, final trade 2 target, 6175/80. This was the long on the Dow, long on the S&P, no trigger on the NQ, and we had a couple carryovers from last week, one on silver, one on gold. We are in the June contract now for gold. Last week, which was week 139, we had a total of 60 alerts. 20 never triggered, 2 carried over. So we had 38 actionable alerts, of which 5 were stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and the simple 3-step methodology that we teach all of our traders. Now, the concierge alerts, if you want to grab a screenshot of those, I'll drag them up to the big screen. Do that. Here we go. So last night I got them out at 15 minutes after the open. There's two numbers for each market. Again, if you want to grab a screenshot, feel free. What you do with these, once they're published, go to your chart, put a line in the sand at 40.41, put a line in the sand at 40.11. If price starts trending up to 40.41, logic will then begin looking for opportunities to belong the market. If price starts dropping to 40.11, logic will then begin to look for opportunities to sell the market. Now, once price exceeds 40.41 and holds a pullback, we're only looking for longs above that number. And if price drops below 40.11 and holds a pullback, well, then we're only looking for shorting opportunities below 40.11. Same for the Dow, Russell, two lines in the sand. Okay, now let's jump to the daily chart. We got some work to do here. This is one heck of a bullish run. Okay, we got a low down at 38.43. This leg, 38.43. Alexa, 40.70 minus 38.43. I didn't. Hey, Alexa. Hey, Alexa. 40.70 minus 38.43.
4,070 minus 3,843 is minus 3,843.
Thanks for pitching in. I'll just use my pencil. 40.70. She can't hear me. She's way across the room. It's not her fault. We're not going to blame it on her. 38.43. How about we call that 127 points, which is equivalent to 1,200 Dow points. Okay. Now, what makes this interesting, among other things, we had a bullish day here. Now, notice on this pullback, remember we had the bearish engulfing. I've gone over this so many times, I won't go over it again today. If you have an interest, go back and watch any of the previous shows. And we had another bullish, or bearish, engulfing. The difference between the two, I'll just say this. It took 1, 2, 3, 4 sessions. Once the signal was issued, it took 1, 2, 3, 4 sessions to get back to the BBC. Price always reverts to the mean. In our case, the mean happens to be green, stands for bull, bear, cross. The price crosses above it, we're bullish. Below it, we're bearish. Bearish engulfing, it only took one session to get back to the BBC because we had a different market structure. Okay? So we hit the BBC, caught a bounce up to the step line. When price rallies up to the step line, we expect that to be good resistance, and it was. It sent price back down to the BBC, which we expect to be good support, and it was. Okay, so now 1, 2, 3, 4, 5, 6, 7 sessions later, find ourselves sitting at 40.70. This was a new all-time historic intraday and closing high, as was this, as was this, as is this. Interesting to note, this all-time historic high was put in on a day, both intraday and closing, was put in on a day that Wall Street was closed, Friday, April 2nd. Over here, President's Day, same thing. New all-time historic intraday and closing high on a day Wall Street was closed. Now, if you're new to futures, new to trading, like, well, so what? Well, It used to be that Wall Street was the engine that drove the world's economy. But if we have a market making new all-time historic highs on a day when Wall Street's closed, we have to start taking a little bit closer look at this global economy we now trade in. Okay, so we've got two sets of fibs here. We've got the last leg up, and we've got the entire move. Now, the entire move began back here. October, end of October, beginning of November. I'll take this opportunity to tighten that up a little bit. Fibs are an area, so don't drive yourself nuts trying to make sure you get everything exactly perfect. You want to get as close as you can, but don't let it become an obsessive thing. Okay. Now, from this low to the new all-time historic high, from the end of October, 1st of November low to the current all-time historic intraday high, right here, right now, a 24% Fibonacci retracement. That is the shallowest possible Fibonacci retracement, is right here at 3871. Interestingly enough, it also happens to be right here at this bullish cross. Now, we know that when price revisits for the first time a previous bullish cross that led to an extended move, that is good support a very high percentage of the time. Rarely does that just get run over. It can happen. Now, obviously, there's a lot of support levels below us before we get there. Okay? And is it possible we never get there? Anything's possible. Now, that was the entire move. We also need to adjust for just the last leg up. So we've got to grab this top number. We've got to drag that up to the current high, 4074, looks like. Okay, now, these other numbers, let me show you how these are arrived at. Just peel that out. I'll shrink this up a little bit. I'm going to take the Fibonacci price extension tool because, see, we're at all-time historic highs. And so when we look left, there's nothing to see. And so using the same 14th century math that we use to generate retracements, we can extend into the future where, based on math, not politics or pandemics, but just purely math, where the market may find, in this case, resistance. You can think of it as a target. You can think of it as an obstacle. It's both. Okay. So what we want to do is grab the price extension tool. And we want to go to the same low right here. And we want to take it up to this is a new high. So we're going to use that. To push this into place. And it's going to make it difficult to see those, but that's okay. I want to be able to show you this. All right. Now, just this last leg up, just the last leg, which started March 24th through today, April 5th. Here's the, remember, this is the 24% fib retracement of the entire move. This is the 24% fib retracement of just the last leg up. 24, 38, 50, 62. Now, the extension that we did, we've already exceeded the 24% fib price extension. Next overhead, using 14th century math, no pandemics or politics, just math, the market may find 4130 to be like a magnet, drawing it to it, and once it gets there, it's potentially an obstacle. After that, the 50% is 4219. As you can see, lots of room overhead. Okay, this again is the all-time historic intraday high you're looking at, and I'm pretty sure we'll have an all-time closing high today. The market would really have to take a dive. Close below Friday's close, which, by the way, is today Wall Street was not open. We start each trading session with the daily chart because we want to be able to identify where important support and resistance is from a higher elevation. When you get down to the smaller time frames, like the 30-minute, the 5-minute, a 1-minute, a 4-tick range chart, you can't see everything. By getting this high elevation view, you can. Now, today's pretty simple because resistance overhead is the high of today, and the initial resistance from a daily perspective is going to be this 24% fib retracement, which we've already bounced off of. Came down, remember fibs are an area, we bounced. So the low of today and the 24% fib of the last leg up, that's our major support. So we'll call it 4020 and 4074. I'll write those down. Okay. All right. Now, for those of you that may be new, the green line again is the BBC, bull bear cross. Prices above it were bullish, below it were bearish. The red and blue line, that's the CFMA1. I refer to it as blue and climbing. That's bullish or support. Red and falling is resistance or bearish. Okay. Climb the back of blue and climbing when price is rallying. And when we run into red and falling, there you go. So until price reaches an area where buyers are able to overcome red and falling, and then overcome the BBC, and then red and falling turns into blue and climbing support. Okay, so we spent 1, 2, 3, 4 days. Now, this says 50% fib retracement, but that's based on today's high. When these 4 sessions happened, this was not a 50% fib because we didn't have this high in place. What we did have was that, okay? Resistance, 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 resistance. 1, 2, 3, 4, 5, 6, 7, 8 days. Now this day, yeah, we spiked it, but look where we closed, back in this area. This is a very important price, very important area. Got a bullish cross, price pulled away, price pulled back, physically touch, and off we go. Okay. Now, this move is about as close to parabolic as you can get. And parabolic markets don't last long, and when they fall, they tend to fall pretty hard. So we're going to be very cautious with the long side, and we're sitting at 40.67, and our highest weekly zone for this week is 40.85. I mean, we're almost there. Okay. Now, anytime we reach the highest or lowest weekly trading zone by a Tuesday morning, that is a very reliable indication that the market is about to reverse and take a trip all the way back across the chart, which means by Friday we could be looking at our lowest weekly trading zone, down at 39.14/15. All right, let's go now to a 30-minute chart, S&P. Okay, now the new zones came out this morning. Last week's highest weekly trading zone was 40.85/86. It is also this week's highest weekly trading zone, 40.85. The zone below for this week is 40.44. So from here, if this candle closes below the step line, okay, we take out that little low right there, then the next high probability move is for price to drop to the BBC, which we expect to be good support until proven otherwise. And from that point, we'll put out an alert to be long the S&P, the zone overhead, with targets along the way. Another possibility is price drops to the BBC and then spikes it a little bit to touch the zone at 44/45, and then we get the bounce. The other option is buyers come in at the low of this candle and they drive us higher from right here. Now, some would say, well, there's a trade. Yes, that is a counter trend trade. Nothing wrong with counter trend trades, but we don't publish counter trend trades as alerts. So the 7,000 alerts that you saw there in the alert channel, those are all trend trades as defined by a 30-minute chart and our indicators. Okay. If we had been publishing counter trend trades and trend trades, then the alert channel over the last 140 weeks would have 14,000 alerts. The reason we don't publish counter trend trades in the alert channel, we want to give the new traders the very best of the best to work with so that they can quickly develop their skills, gain confidence, that type of thing. The counter trend trade simply doesn't have the same high probability as a trend trade, in my opinion. Okay? So that's why we've selected to only put trend trades. So again, we would not. Now, once you understand the methodology and the strategy, I mean, if you want to short this, certainly you can. It's your trading business to do with, as you see fit. You just won't see an alert for this. But wait, it'll either find support here or here. Now, if it finds support here, we can't put out an alert to be long until price gets back above the BBC. The price is above the BBC, and we had a little head fake, and we bounced off of a previous weekly zone at the bullish cross. So we had a nice leg. A retracement is absolutely called for here. Does that mean it has to happen? No. It is the most likely thing to happen. So last night on the S&P, The CTA was to be long at or above 40, 41. Now, when this alert went out, this weekly zone did not exist because this is a this week zone. This is last week and this week. So the entry, CTA entry to be long, $40.41, the final trade to target was 40 points overhead at $40.85. See, the CTAs were published last night at 6:15 p.m. Eastern, but the weekly trading zones, the WTZs, those are published Monday morning, 6:15 a.m. Eastern. Okay, so from 40.41, 40.73, we got about 32 points. We'll call it 30 for the sake of simple math. 30 points, $50 a point. This move so far worth $1,500 per contract traded. If you've earned the right to trade 2 contracts, then it's $3 grand. If you've earned the right to trade 10, it's $15,000. Now, when you become a member, passport holder, your first job is not to go put on a live trade. Your job is to learn the methodology, learn the strategy, learn how all the different pieces come together. Now, you will be trading day one, but you'll be trading in the simulator, in your demo account. You're going to earn the right to go live. The way you do that is by putting together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with 1 contract. Once you go live with 1 contract, your goal now is to, because you're trading real money now, increase the balance by $2 grand. Once that happens, the blueprint gives you the green light to add a second contract. You're adding the second contract with profit you earned in the market. That makes it a lot different than the first contract. First contract comes out of your pocket. The second contract is funded, underwritten with profit you earned in the market. Now, when the blueprint says add number 3, number 4, number 5, you only add one at a time, and you only add with profit you earned in the market. If you follow that, it makes it difficult to blow up your account again. Okay? I'm not going to say it's impossible to blow up an account with us. I'm going to say you got to break a lot of rules in order to do so. Because once you go live, anytime that you have 2 consecutive days in a row where you don't reach your goal, come out of the live market, back into the simulator, you book a mentoring session so that we can help you figure out what happened. Okay? Now, that's not a walk of shame. It's a wise business decision. That decision will help prevent you from blowing up yet another account. You had a rough patch, there's no shame in that. The shame would be as if you don't hit pause and ask for some help, because all of our members have access to unlimited one-on-one mentoring. You have 2 hours of live training every morning. It's 10 hours a week. And then I spend 2 hours with you in the afternoon here in a live environment where you can ask questions. That's 20 hours a week with an instructor, interactive. You ask questions, you get answers. When you buy one of these courses that says it's going to teach you how to trade, it's mostly you watching some videos. Well, unfortunately, you can't learn how to trade by watching videos, just like you can't learn how to swim by watching videos. You can learn the principles, you can understand what a breaststroke is, but until you actually get in the water and get wet and start doing the breaststroke or dog paddle or whatever, that's when you learn how to swim. Okay? And so we put you in an interactive environment every morning for 2 hours, in the afternoon for 2 hours. Plus, we provide 24/7, 365 support via our Telegram channel. We have a number of different channels, some public, some private, but anytime you need help, all you have to do is reach out. And someone will be around to answer your question, give you a hand, okay? So, from the CTA entry of 40.41 up to the swing high, basically $1,500 per contract traded. Now, we did not get to the final trade to target. However, we just got an exit signal. This is how the exit signal works. This is a long trade, okay? So on a long, what you want to see is, you see the separation here between price and blue and climbing? Okay, that's good. And you see the step line. See how the step line is on the left side of blue and climbing? Steps up and over. Steps up and over. Up and over, up and over, up and over. And then it steps over, steps over. Now you've got a different dynamic. Price, instead of being on the left side of blue and climbing, it's on the right side. The step line has gone from the left side to the right side. What you're looking for when that happens, when price walks sideways like this, you're looking for the first red candle that closes below the step line. And actually, that would have been this one right here. Closing price of that candle is 40.68. You can see just a little bit of red there. Candle closed below the step line. So on a long trade, on an extended move, first thing you'll notice is price starts to walk sideways. Then you'll see the step line go from the left side to the right side, on the left, on the right. Now watch for the first red candle to close below the step line. That is your exit signal. So the closing price, 40.68. Exit signal, 40.68. Okay. Okay. $40.68 minus 41. Oh, let's see. 68 to 48, that would be 20. Got about 27 points at $50 a point. Hey Alexa, what's 27 times 50?
27 times 1,350.
1,350. So $1,300 per contract move from the published entry to the chart, giving you a exit signal and an exact price to exit the trade. Okay, this is picture perfect. This is what they would call the textbook example. Okay, now remember what we're looking for now. Okay, this is come and gone. This did what we had hoped it would do, what we thought it would do, what the next high probability move was. And now the next high probability move is the retracement to the BBC. The pullback holds more often than it doesn't. So we'll be waiting for the market to find support here. It might consolidate for a couple candles. But as it starts printing green and climbing back up, we'll have an alert. And based on market structure, at the time the alert's issued, we'll have possibly 1, 2, or 3 targets on the way up to the final trade to target. Now, if you entered here at 40.41 and you know that 40.85 is the final trade to target, you might say, well, you know, price is going to pull back to the BBC and it holds more often than it doesn't. So I'm just going to hang in there, you know, and I'm just going to ride it up to 40.85. Okay? Please rethink that. Okay? Because yes, the pullback holds more often than it doesn't. That doesn't mean it always holds. Difference. It holds more often than it doesn't. So if you've got $1,300 profit per contract in a trade, I do not recommend that you endure this drawdown because it's supposed to hold. Well, what if it doesn't? Because you can, as soon as you get your exit signal, take your profit, $1,300. You didn't get out at the swing high, but hey, getting out at a swing high or swing low is pretty tough. Nobody knows it's a swing high or swing low till after the fact. Take your profit, $1,300. Let it retrace. Let it prove to you that the pullback is going to hold this time. Holds more often than it doesn't, but hey, what if this is the time it doesn't? So let's be patient. Got our profit. Let the retracement happen. Let it find support. It can bounce right off of it. It can consolidate for an hour, 2, 3. It also could rip right through it like it's not even there. So we take our profit and then we wait. And when the opportunity presents itself, I will publish an alert. Now the idea with the alerts is that you take what Michael has taught you in the room and then you apply it to these windows of opportunity. Last night, I saw a window of opportunity from 40.41 to 40.85. Okay, so I put out an alert, right? You should, every time there's an alert, don't just jump in and put on a trade. The idea is that you study the alert and you study the chart. Because your goal is to learn how to find these windows of opportunity yourself. Without me or anyone else telling you when to get in, when to get out. You want to be in control. You want to be. Now, trading's a lonely business. We all know that. So our group, our community, our family, whatever you want to call it, that's important. There's conversations going on around the clock in our discussion group and Telegram. But even though you want to be a part of a community where you can get feedback from like-minded folk, you also want to get to the point where you can look at a chart and see the opportunity yourself. That's what we're doing. Michael's teaching you the mechanics of the methodology, the system, the strategy, and then I'm helping you to see the big picture, the windows of opportunity. So you'll take what he's taught you and apply it to what I teach you, and pretty soon you won't need anybody to tell you when to get in or when to get out. Okay? All right. So not much we can do here. Now, what if buyers came in right here? What if we never pull back to the BBC? What if price just starts to climb? Because remember, this is still the final trade to target behind this window of opportunity. What if buyers just came in right here and drove us up and drove us up? Could we do anything? Well, got to see what market structure looks like, but yeah, once we get above this high, get above, because if we go down or sideways, one more red candle, this is pretty close to turning into red and falling. This. Right? And so we would want price to overcome this obstacle, and this obstacle by more than just a point or two. And then we would take advantage of this opportunity up to the zone. Maybe something like 40.80 to 40.85. Again, got to wait and see what market structure looks like when price gets there. So if you only trade the S&P, this would be the time for you to take a sandwich, walk the dog, whatever it is you do, meditate, until there is a window of opportunity. Now, if you are a person who says, well, I only trade the S&P, then I'm just going to ask you one question. Why? If your answer is because I'm brand new and it's hard to focus on so much stuff at one time, perfectly acceptable answer. But as time goes on, you're going to see that we trade the Dow, the Russell, the NQ, gold, crude, silver. We trade them all exactly the same. Same indicators, same strategy, same principles, same everything. Because when you sit down to trade, the S&P may not have a setup. Like right now, there's no setup on the S&P. So you could, if you only want to trade the S&P, you can wait till there's a setup. Or you can take all the knowledge that you have about trading the S&P and just go trade the Dow, the Russell, or the NQ, or crude, or gold, or silver, because you're going to use the same indicator, same principle, same methodology, same strategy, same everything. All right, let's go to the Dow. And here it is. Okay, last week's weekly trading zone was 33,500. And the CTA number last night was 33,305. 33,305. Go. And the trade to target overhead is 33,500. So that's 100, let's see, 33. Yeah, so that's 195 points. Alexa, 195 times 5.
195.
Okay, so this is a $975 per contract move. From the entry to the target. Okay? If you did not take price for whatever reason at the target, see the step line? Just like on the S&P. Step line on the left side, it's on the left side, now it's on the right side. This one doesn't count because it's in the process of crossing. Okay? You're looking for the first red candle to close below it after it crosses. So that would be this candle, 33,427. So there you have it. Now, when you see price struggling, of course, to get through here, then again, you either take price at the target or you don't. And if you didn't, this would be the exit signal. Obviously, from the entry to the target, that's your best option. It's basically $1,000 per contract trade. You've earned the right to trade 2 contracts. It's $2,000. 3 contracts, 3. 10 contracts, 10. Okay? The worst mistake you can make is to just dive in, start trading real money, multiple contracts, before you even learn the strategy. If you do that, then whatever experiences you've had in the past, bad experiences, it's just going to happen. It's, you know, so you do something different. Until something changes, nothing changes. Okay? Now, just like with the S&P, go back to the BBC. We expect it to hold. It holds more often than it doesn't. Okay? Are we ready to get long? Nope, not yet. Because getting long here, our first obstacle is right there. Second obstacle is right there, in there. So we want to see price pull back, hold. Now, if buyers come in early and we don't get a pullback all the way to the VBC, those obstacles I just pointed out here, here, we would want to get above those and trade this. 33, 470. Nah, make it 75. 75 to 500. Although we do have new weekly zones right now. So, in fact, I just noticed something. We've already exceeded the highest weekly trading zone. The highest weekly trading zone for this week is 33. 390. Now, this is very unusual. Very unusual. But it happened. Not the first time it's ever happened. So let's make this yellow because it's last week. Okay. All right. This is this week's highest weekly trading zone, and we're already above it. Now, I talked about this parabolic move and how much further can it go. Well, I don't know what's going to happen next. But I do know that moves like this are usually followed by moves like this. So I'm not going to forecast, some specific number where the market turns. No, we're just going to continue to trade what's in front of us. But we're in a very unique situation here. We are at the top. We've been at the top, and we keep putting in new tops. Okay. I'm catching a little bounce here off of this week's zone, which is 33,390/95. It is the second we've got resistance. We're at the step line. And then this swing high is potential resistance. And this high lines right up here. Potential resistance. So, got about a 25-point trade overhead. Be cautious. This may be the high. Okay. Now, it's pulled back and it looks like it's ready to fire again. Right? We didn't make it all the way back to the VBC, but we did find support at this week's zone. So, I don't know that I'll put an alert out on this one, but if you choose to trade it, be cautious. Okay. All right. Next, the Russell. Okay. And this. All right. Last night's CTA number for the Russell was to be long 2314, which we never hit. Correct. Okay. So the short side for the Russell last night was 2280. There. Important prices, important areas, almost always tested. Sell 2280. And the long side was 23.14, which obviously we never got to. So this first trigger, 22.80, took us down to 76. So that's 4 points, $50 a point, $200 per contract traded. This one just down, not quite 2 points. Okay. And then again, you can count these as individuals if you want. 22.80, this was good for 2 points. That was good for a couple points. And that was good for 3 points, plus 3.4. And then this move was the big one. Okay. That gave us a swing low down at 22.50. So that's a 30-point move at $50 a point, $1,500 per contract trade. Next, the MQ. On the Russell, hang on. 22.72, that's a last week zone. So I'm going to make it yellow. Okay. Now, we have a this week zone up at 22.87. $22.87. And below that, it's $22.64. $2.64, and then $22.40. Which was also a zone from last week. And then below that, we got 22. $22.25. All right. CTA. The trade to target. 64. 16 points. Yeah. $50 a point. All right, now we'll go to the NQ. Okay. The number for the NQ last night was to be long 13,399. $13,399. And on this one, we only got one trigger. So from, we'll call it 400 to 600. Let's do that. 400 to 600. That's 200 points at $20 a point. This is a $4,000 per contract trade. All you had to do was be long 13,399. Hang on one second. $13,399. We said we'd call it 14. 13,400 to 13,600. 200 points, $20 a point, $4,000 contract traded, $4 grand. 2 contracts, $8 grand. 10 contracts, 40 grand. Okay. Again, once you get your passport, once you have access to all the alerts, all the tools, all the classes, all the everything, worst thing you can possibly do is go put on a trade with 10 contracts, or even one live in that simulator. Put on and take off trades, put on and take off trades, ask lots of questions. It will start to make sense. The more you dig in, the more you apply yourself, the more sense it'll start to make. If this candle closes, if we've got 5 minutes left in this candle, if it closes below the step line, that is the exit signal. Okay. Final trade tube targets way up there at 749. So I would absolutely. And you could have taken profit here or here. It's your business, right? But got a really nice profit. Now, could buyers come in, rescue the day in the next 4 minutes, send us higher? Sure. Could happen, but it doesn't appear to be the next high probability thing, does it? That's rhetorical. No, it doesn't. Okay. All right, we got to get out of here real quick. Crude oil. CTA last night for crude was to be short 60.40. $60.40. Important prices, important areas. Almost always this. Okay, so from 60.40 we made it down to 60.10, so that's $300 per contract traded. Back above the trigger, 60.40. The 59.60. $800 per contract traded. And then on the final trigger, we went from 60.40 to 58.40. Now we went further, but just to make it simple, 60.40, 58.40. That's $2,000 per contract traded. If we get down to 57.40, that'll be $3,000 per contract traded. Okay, gold. CTA last night for gold was to be long 1734. Huh, look at that. 4 ticks, that's it, 40 bucks. The short side, 1720, which we never reached. And then last is silver. CTA last night for silver was to be long 25.11. Rose 3 pennies. 2 pennies is 100 bucks. The short side was 24.69. The swing low was 24.69. Oh, wait. Three pennies. 2 pennies is 100 bucks. So there you have it. That's everything. All right, let's jump over to a good word for the day. And today we'll talk about deciding, sticking with it. Joshua 24:15, as for me and my house, we will serve the Lord. People who succeed in life set their priorities early and maintain them daily. That way they don't have to keep reestablishing them. That's a good idea for 2 reasons. Number 1, it takes the emotion out of it. If you're not careful, you can make a life-altering decision based on a temporary situation rather than God's will. Or worse, base your decisions on your feelings. By establishing your life's priorities before you have to, you can do it without your emotions manipulating and controlling you. Plus, you're more likely to set them with integrity. Joshua did that in Joshua 24:15. As for me and my house, we will serve the Lord. Now, number two, it makes managing your life easier. Once you nail down what's important to you, you can live based on those principles. Suppose you're a compulsive gambler and you decide to stop. Your task then becomes ordering your life in light of that decision. That means removing the betting app from your phone and staying out of the casino. Or maybe you want to build a better marriage. That may mean spending less time at work or on your hobbies and maybe planning a weekly date night with your spouse. It takes honesty, born in prayer, to know what your real issues are, and then to make good decisions accordingly. And it takes character and perseverance to follow through once the decisions are made. The great thing is that once you decide, and then, as it says in Proverbs 16:3, commit your actions to the Lord, your plans will succeed. He will give you the strength each day to live by your decisions. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.